The Polygon Matic token keeps crashing. Why is that? Why is there no floor? Who's actually selling here? Let's have a look at some on-chain data. Let's have a look at some relative valuations and see whether or not this is a falling knife or a potential opportunity. Now, I've made a video on Matic, or the POL token, roughly 1 month ago. And what's interesting about this video is that it outperformed the average video. So the average video is here in gray, in blue is the Polygon Matic video. And that happened even though that was a very bearish video. And bearish videos tend to do not that well on YouTube, right? Most people want to get their bias confirmed. They tend to give thumbs down when they own an asset and they see something critical. However, even though that video was critical, it still outperformed. Now, Matic is a layer 2 scaling solution on top of the Ethereum blockchain. There are now many L2s, and so it makes sense to compare the Matic price with the Ethereum price. Matic was one of the first of its kind, and so initially it did very well. But now the competition increased, now there's optimism, now there's Arbitrum, and recently also the base chain. And so now we see an underperformance of 87% in the span of only the last 1.5 years. The picture doesn't look that different for Matic relative to Bitcoin. Also here, historically, we are at an all-time low. We have underperformed Bitcoin since launch by 45%. Now, Matic is in a tricky situation. It's now in a market segment that has very little adoption. Crypto is now splitting into two directions. On the one hand, we've got the long-term Bitcoin investors that simply regard Bitcoin as the safest of the monies, at the hardest of the monies, and that might allocate to Bitcoin through the ETF. On the other hand, we've got the people that actively trade, that want to get 10x, 100x returns. And so everything that's not extremely high risk or that's not Bitcoin, that tends to now shrink. What we've got over here is the others dominance. So this is a measure of how much of all of cryptocurrencies market cap is in the altcoins that is not in the top 10. And yes, this is fluctuating to a degree, but since beginning of the year, the field in the middle tended to do pretty poorly, minus 33%. Again, that's relative to all the other cryptocurrencies. And at the same time, the importance of Bitcoin as a fraction of all of crypto continues to rise. The Bitcoin dominance is going up. This will not happen forever though. I believe there might be again a turnaround at one point. And that's when we hit the 70% mark roughly, because in the past, that's exactly what we have seen. Whenever Bitcoin was at around 70% of all of cryptocurrencies market cap, we have seen very quickly that dominance crashing. Now, when Bitcoin dominance crashes, this is simply another sign for the altcoins in aggregate outperforming. Right now, Bitcoin is outperforming most, but depending on how quickly this appreciation continues, maybe in 6 months, maybe in 12 months, we will be at a heated stage again where the altcoins, including potentially Polygon Matic, could outperform again. Now, we all know the source of that outperformance. It's Wall Street money. It's money flowing in through the ETFs. So that's very positive almost every single day. And that's because the Grayscale Bitcoin Trust isn't selling anymore. Now only the new instruments see inflows, and that's of course supported by the Trump administration. Trump is pro-crypto, and so Wall Street feels more comfortable allocating to Bitcoin. Now, there is a potential catalyst for Matic, and that is Ethereum. I was bearish on Ethereum for a very, very long time, but now we could see a potential turnaround. And again, the reason for this is the ETF. Ethereum has an ETF as well, and that was pretty dormant up until recently. In the last 5 days, we've seen a lot of inflows, and if you annualize the last 7 days, we already get at a 7.1% supply absorption. So that refers to all of the Ethereum supply. 7% of it would be absorbed by the ETF if those inflows were to continue. Now, since the merge from proof of work to proof of stake for Ethereum, ETH had a very bad time against Bitcoin. It went down by 59%. But if now Ethereum can turn around through those ETF inflows, by extension, Matic might also go up because it could be seen as a levered version on Ethereum because it's a layer 2. Now, how did we find ourselves in that mess? The answer is, of course, the update of the tokenomics after the move from the Matic token to the POL token. The Matic supply was supposed to be kept. Now it's not anymore after that merge. Now we see inflation. And that's especially problematic when the usage on Polygon isn't really that high. Only $182 million worth of tokens got traded on Polygon in the last 24 hours. Compare this with Solana, that's close to 7 billion. Now don't get me wrong, I'm not a perma crypto bear. I'm not bearish on crypto as a whole. I simply just think that the market is now splitting up. We actually see how crypto is currently expanding. We do see how money is flowing from traditional finance into crypto. Have a look at this. This is the stablecoin market cap over time. And this goes up whenever you send your hard-earned US dollars to a centralized exchange. And that centralized exchange might then send this over to Tether, and Tether then creates tokens. And this goes down whenever you withdraw, right? Whenever you want to pull your fiat out. And so this crash over here was the Terra Luna collapse. This is when UST went belly up. It started the bear market, it started the contraction, and through that contraction also FTX collapsed, and then it turned around at the beginning of October of this year, and it's now accelerating again. But here's the thing, crypto is all about risk versus reward, and we all know how crypto is very risky, thus the upside potential needs to be there. And so even though Solana, for example, is used a lot now, I don't necessarily think that it's that great of an investment either. Because check out the Solana dominance. It seems to be peaking. So I'm not saying that the Solana dominance has to go down. I'm simply saying that it might just keep pace with Bitcoin. You might not get this additional risk compensated. The market seems to have understood this concept. Because otherwise, how is it possible that the top performing categories within crypto are now the meme coins? It's the tokens that can 10x, it's the tokens that can 100x. The entire pump fun ecosystem, so the launchpad of meme coins on Solana, went up by 130% in the last 7 days. What else went up? Elon Musk inspired memes, base memes, dog themed memes, AI memes, frog themed. It's all memes. And we can even drill a bit deeper, right? What within the meme coin market performed best? It's the tokens with most upside potential. So have a look at this. In the last 24 hours, what performed the best? It's market cap 19 million, 31 million, 128 million, etc. It's in the few millions. It's not in the few billions. And so really the art of the game is to either simply have exposure to the asset that tends to appreciate most against the rest, or alternatively to be very active in trading the things where all the attention is now headed. We already know that with an altcoin we can easily lose 90%. If that's the case, why not buy something that can also 10x? And so here's what performed the best in the last week. It's again the pump fun ecosystem, and the token that made 1,700% in the last week is now at 1.7 billion, but 1 week ago it was at 100 million. It's currently at $1.83. And the first video about that token, about the peanut meme coin, was published here when it was still at 11 cents. And so I got a lot of questions in the last weeks, right? Why do I make so many videos on meme coins? Again, I believe that's where most of the growth is. It doesn't matter whether or not we like it, we simply just have to face reality. People either just allocate or they actively trade. Everything in the middle gets crushed. And so why not be part of the party while it lasts? By the way, Peanut is up since that video by 1,500% roughly. Now to outsiders, this might all seem like random gambling, right? We buy a meme token that has no intrinsic value and we hope for it to go up. Why should we do this? The answer is those kinds of performances are not random. Crypto is both a game of luck, but also of skill. And so when we've got some analytics that most people do not have, when we've got information that most people don't have, then we can buy better than others. We can sell better than others. We need to know something that most people don't. And so here is my personal approach to this. I like to track other people that influence markets and that tended to do the right calls in the past. So have a look at this. We got an alert that Crypto Banter bought the peanut token at 3 cents. So that was over here. Since then, the price went up by 6,000%. Now, who is Crypto Banter? Crypto Banter is one of the largest crypto channels in YouTube. They've got 1.1 million subscribers. When they talk about a token, the token goes up. Through on-chain analytics, we found 33 of their wallets, and we track those wallets. We get alerts whenever those wallets buy or sell something. I have a look at this. This is Alex Becker. He's got 1.48 million subscribers. We've got 12 of his wallets. And so it's all about following the smart money. It's all about replicating the people that make money in crypto. It's not about random gambling. It's not about picking random tokens with funny names on a list. And so I believe that much in the strategy that I've built a dedicated course just on wallet tracking. How can we find wallets by influencers? How can we subsequently track them? And how can we finally interpret the signals that we get from the tracking? It's 8 videos in total. It's part of the premium membership, but premium is not just about wallet tracking. It's also about on-chain analytics. It's about portfolio diversification. It's about backtesting. There's more than 100 tutorial videos in premium. Once we've got a wallet signal, we of course also have to discuss it. We have to figure out when to buy, when to sell. We have to look at the different on-chain analytics. That's why we've got dedicated chats on the individual altcoins in premium as well. And so I believe it's important to be part of either segment. Simply just dollar cost average into Bitcoin or get into active trading. If you do want to do the active trading, don't just do it randomly. Do it with a group that does proper analytics. It's currently $125 per month. There is a 1-week money back guarantee. So in case you don't like premium, in case you don't make money, just message me within the first 7 days and I'll refund you 100%. There's really zero risk for you. Yes, there is a slight chance that the Matic token might go up in case Ethereum gets supported through the ETF. I think the best chances though are when Bitcoin dominance is at 70% and most altcoins outperform Bitcoin at that point. Before that, I simply just bet on the very small meme coins. I believe this is where most of the upside is. If you got some value out of this video, feel free to subscribe. I publish these regularly. A like would be very much appreciated as well. Helps the channel grow. See you in the next video or see you in premium. Cheers.